Josh, Ryan. Hey, we're excited. It's Tuesday evening, and man, there's a lot going on this week. It seems like the markets are still trying to figure out a direction in some ways, but we got a lot going on in the crypto space. What do we want to talk about, Josh? What do you got on your mind?
A lot. I mean, it's wild to see the alts running. We thought maybe Bitcoin would get started moving first, and then the alts would follow. So it was kind of a surprise to me to see that you've seen these alts run 50, 100%, some of them. But today I was hoping we could talk maybe a little about the strategies and ways to protect yourself when the tax man comes, and how you want to count your taxes throughout the year and minimize those.
That's a big topic, especially right now. I just got done doing my taxes this weekend, and
Oh,
I think there's a lot of people probably thinking about it, especially because a lot of people are making a heck of a lot more money in 2021 right now if you're in crypto than they did in 2020. So, what's your strategy, Josh? Do you have a tool that you use, or what do you do?
so I track it all myself. I download and keep track in Excel and do the CSV files. I know some people will pay and then use a tax man or a tax service. I do it all myself because I want to learn how to do it. And you look through the crypto tax laws. There really isn't much right now. It's pretty basic. Um, Buy, sell, or convert is basically your only tax obligations in crypto. And just like stocks and commodities, you got your short term and your long term gains, and each one of those has its own tax percentage based on your tax bracket. And we know that Joe Biden is trying to raise them. I'm not sure. Has he raised them yet? Is he going to raise them?
Yeah, he's trying to raise them, but the formal plan hasn't been kind of laid out. We don't know if he'll raise them or not. And this is a topic on CNBC right now. They're not sure if he'll actually be able to get it pushed through.
I'm not sure from what I've seen, that's upper class individuals were going to take the brunt of that. But I don't know what that necessarily means for investing.
And corporations. The corporate tax rate is in question as well.
Yeah, there's a lot of crazy all over the place. Like we talked about a couple weeks ago, somebody was proposing an unrealized gains tax, which is absolutely insane. For a lot of different reasons. You would think of the person that would advertise that would have not talked to anybody that's been investing at all before they proposed that.
Who was it? AOC?
I can't remember who it was, but yeah. Nick, do you use a tool? Is it all self?
Man. Well, this will be my first year. Not even this year. Like this tax season, it'll be next tax season. Will be my first that has any crypto impact. My taxes are already complicated enough, Ryan. Being a real estate investor, it's already complicated, right? And then in addition to that, we have an LLC, and so I'll be able to write off some of my personal expenses like my laptop and things like that against that. So this upcoming year is going to be really complicated from a tax standpoint. And then you add onto that, like Bitcoin is simple enough, right? It's just buy, and then you it's basically just the same as a stock. But when you get into yield farming and or if you look at like the governance token yield farming, which is automated, right? And you can't necessarily see the transactions on because a lot of these places will print out CSV files. You can't see those things, but it's still income. I don't know. I don't know what all that looks like. So I think we're just in like really murky waters, and it'll be curious to see how it all unfolds. But I'm going to try my best. I'm going to try my best to report everything, but honestly, it's going to be a lot of manual sort of jiggering things together and trying to do my best, man, because it's going to be confusing as hell for me personally. But
Well,
I
the
pay
stuff,
it. Go ahead, Josh.
the stuff that doesn't have the laws yet, I mean, that's all we can do is our best. You know, the reward harvesting and the automatic. It's basically reinvesting your dividends automatically, but they call it rewards, and there's no KYC, there's no reporting, so it is the wild west. And I
like,
think
for example, are we required to share our wallet address with the government?
I could totally see that.
Yeah.
You could totally see that. Well, I don't know. The thing is, like, I just don't know. And like, because a lot of this shit that we're talking, dude, it's so fringe. The people who are in cryptocurrencies still don't even know what the hell we're talking about with yield farming. Like, there's like the 99% of people, then there's 1%, and then there's like the 1% of the 1%. And we're like kind of over in that slice of the pie right now, and it just feels like very yeah.
Have you guys ever used CoinJoin? Are you familiar with that, Josh?
I've heard of it. No, I haven't.
I've never used it either, but CoinJoin is this thing where you can send Bitcoin through CoinJoin, and it basically groups or splits apart really your payment or your transaction with a bunch of other transactions, and it basically muddies the waters for the on-chain analysis. So that, like, for example, the tool that the government bought from Coinbase, which allows them to track, okay, you put money into Coinbase and then you send it to this wallet. We're assuming that this is your wallet, and then it's can track that wallet. Okay, you send it over here. Okay, we can see that that's a Binance wallet or whatever. And so they have this tool that they purchased, I think $300,000 or something like that, to do this type of analysis. But there's these tools like CoinJoin, for example, that kind of split things up and add some anonymity, I guess, to your transactions, which I think is going to be a huge thing over the next couple of years as more tools like that added. I don't know if you call that a second layer tool or not, but something that basically just adds some anonymity.
Because if you do that, how do you know if it's long-term or short-term?
I've never heard of a long-term gain tax in Bitcoin. I thought they were all short-term, even if you held it for 5 or 10 years. I thought they were all short-term gains.
I think long-term.
I don't know about that.
I was watching the Rich Dad Poor Dad guy, Robert, and he likes Bitcoin. He likes commodities, and he said there's a long-term and there's a short-term.
Okay.
He just holds. He's a holder.
Yeah, I use a tool for going back to the tax topic. I use a tool called Coin Tracking, and I pay quite a bit. I think it's like $500 per year for that. I pay for, like, it's like the ultimate service because I do a lot of trading, and so I have a lot of transactions. And once you get to a certain amount of transactions, and I've been using it for 4 years, so once you get to a certain amount of transactions, you got to pay and pay and pay, and so I pay for this service. But to me, I'm kind of weird because I have libertarian ideals where I just want to be free, and I typically believe in less taxes. But I would gladly pay the government more taxes just to stay away from me. So I go way out of my way to track everything as close as possible. But like you guys said, there's some things that are, I personally do it manually. Like, I'll go through my account every week, every Saturday. I go through my account, and if I have something where it's paying me some type of reward, I'll put the reward into my coin tracking, and I track everything that way. So, but yeah, I think people in crypto, and they really say, the government really calls it Bitcoin, but people in crypto, I think we're going to have a magnifying glass on our tax returns that probably others would not. So
yeah, I was watching a video on like the odds, the likelihood of you getting audited by the IRS. It's for just across the population set, it's 0.6%. It's less than 1%. But then that level of audits goes up as their income increases. So like for the people who make more than $500,000 a year, they have a much higher risk of being audited. But then a part of that is actually also what's on your taxes, your tax return in general. So if you have a Section C, which I think is the tax forms that you need for reporting like payroll or it basically is like a business tax form, that increases your likelihood of being audited as well. So certain activities that you do make you more, at risk of getting an audit. And I would be shocked if crypto, like you report some Bitcoin, they're like, oh, dude, I gotta get this
red
guy.
flag.
He's trying to, he's trying to
Yeah.
steal our money. I just know that that's what the conversations are happening inside of the government right now.
It is
100%.
It is kind of weird though, at least from my perspective, because I want to be 100% transparent with the IRS and pay every penny that I'm supposed to pay, because I don't want any of their business. I don't want to have to mess with it. And at the same time, I don't want the government to know if I were to have some cryptocurrencies, because the government's already proven, they've demanded that people take, they've come and try to take people's gold and then demanded that they give their gold. And there could absolutely be a future like that. So
That would suck.
I hate it. It's, you want to do the right thing, and I'm going to do the right thing because it's not worth it. But it's kind of a weird situation.
Josh, was there something specific that you wanted to kind of cover on the topic of taxes, or what's on your mind related to this?
I mean, what we're covering now is good. Kind of just give like what we're doing and how we're approaching it. I just wanted to share how I used to trade. I used to trade options. I had some good years, mostly bad years, and the good years I had were eaten up by fees and taxes. And I've been listening to Robert and taking some tips from the family biz and what the wealthy do compared to just, I mean, rich dad, poor dad, he just calls them poor. Like you either have a rich mindset or a poor mindset. And it has to do with debt and your feelings on debt, your feelings on holding and borrowing as much as you can. Like he loves borrowing money. Like when he gets his income, he takes it and he gives it to his real estate guy to hurry up and buy a new investment, buy a new real estate with it, so he can pay the least amount of taxes possible. And so, just for an example, he'll take $1 million in income, and his real estate guy will borrow as much as he can, as much as he can. He's not afraid of debt. He looks at his cash flows. Of course, you want to make sure your cash flows catch up with your debt servicing and all that. But he loves debt, and it's something that I've heard wealthy folks talk about, that it's just something that isn't taught in school. It's just something that isn't taught in traditional finance. And most people, when you bring up debt and mortgages, they're scared of it. And there's just been like a slight tuning of the way I personally have been looking at, things like leverage, and we've talked about using our Bitcoin as collateral and different ways to leverage it. And I think it's a good thing. I think long term it's a good thing. He also talks about how the economy turns because of debt. You have entrepreneurs and businessmen. If they didn't go out and take on debt and create these jobs and stuff, there wouldn't be as many jobs. There wouldn't be as much productivity. I don't know how you guys feel about that.
I totally agree. And actually, Ryan, this is how we first bonded over conversations similar to this, related to Dave Ramsey, and how Dave Ramsey kind of programs, get out of debt, make sure you pay off your everything, your car loans, your mortgage loan. It doesn't matter if you have a 2% interest rate, 30-year fixed mortgage. No, 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 no. You got to pay that down. Funnel all of your money into that before you put it into investing and things like that. And I think that that's just so backwards. Now, I do think that there's a limit. There are limits to the leverage that you should be taking out, and that's maybe that I would be remiss to not mention that. We would be remiss to not mention that in this conversation. Like, I don't think it's appropriate to just go out and just take on as much debt as you can. That's how you end up with the Archipelago guy who just lost like his family's like fortune, 10xing his leverage.
A lot of those guys are reckless though. Like they're leveraging 10, 100 times at different scenarios.
I heard somebody say today that he was at the equivalent of a 20% down on your mortgage though, which was an interesting perspective. And I know it's different because it's risky, but I saw somebody say, well, yeah, what he had like $20 billion and he had 110 billion
Right.
that he was essentially risking, which is pretty close to 20%, which I don't know. I just thought it was funny. Somebody was
that's on stocks though. That's a completely thinking about a fixed rate mortgage versus like 4 stocks. Like it's not.
Yeah, I think
it's not the same.
What Dave Ramsey, I think what Dave Ramsey has done is he has made a system that works for every person, and in theory isn't going to hurt any person other than it's going to keep you poor if you never take your cash and you put it to use. And so Nick and I would say, but I think we want to be careful of saying, like, we're not talking about credit card debt. Like, we're not suggesting you get 24, 25, 26% credit card debt. But if you have a house that's 2-3% interest and you can get 8, 12, 20% interest or return on your dollars in the market, what should you do? And I've personally on my personal Facebook page, I've exposed two separate things. I had a car loan and I have student loans, and both of them I could pay off if I want. Neither one of them, I didn't pay off either one of them. To me, if I would have paid off by the time you're ready to pay off your car loan, for probably 75% of people, you probably don't have any interest left that you really need. There's probably only a couple dollars worth of interest on your loan. And what people do is they would get excited about paying off their loan, but the bank wins. if you're paying down your principal and there's only a couple dollars of interest left, you're paying down, the bank wins because they're getting free cash and you're not making use of that cash. But at the same time, I've kind of changed my position a little bit on this, especially because of the inflation that I think is going to be coming. So I think it's like both of these things are true. Inflation is probably going to come, and your 2 or 3% interest rate mortgage is going to look really good for you and really bad for your bank. So that's I think that's going to be true at some point in the future. It's also true that it's probably a good idea to have enough liquidity that if something goes crazy in the world, you could pay off your mortgage if you had to. I think those two things are nice positions to be in. And that's what I'm personally trying to do. I'm trying to be liquid enough that I could pay off all of my debt if I had to, if just the world, goes crazy with inflation or whatever that looks like. But I also am using debt where possible to put that cash to work to make more cash.
But if the world's going into super hyperinflation, don't you want as much debt as possible in the American dollar?
Well, that's what I'm saying.
That's
We
what I was
don't
going to
know.
say.
We don't know what a bank does in a situation. We don't know what 2008 looks like, where you have a housing crisis. We just don't know what it looks like when we go into hyperinflation mode. I don't know. We have to go back to Germany in the 20s to get an example of what we're talking about, and it's not the same world, right? So we don't have any examples of what it looks like if the US dollar goes into hyperinflation, like we saw the mark go into hyperinflation in the 1920s. We just don't have an example. So all I'm saying is I would like to have the liquidity that, let's just say for some reason mortgages, the contract we have with banks are in question for some reason. And I don't know. I don't know the laws of what happens, if hyperinflation really does happen. But all I know is there'd be a lot of banks that would be in really, 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 really bad positions, and our entire economic ecosystem is built off those banks.
So what do you want in those scenarios? Hard assets and commodities, right?
Yep. Yeah, but I would like the cash to pay for those hard assets. If if just the worst possible scenario happens, I'd like to have some liquidity that I could cover my debt. That's just my goal. And what we're probably talking about is either never going to happen or it might be 5, 10, 15 years from now.
Wouldn't you say it's highly unlikely, at least in the short term?
I don't think it's highly unlikely that the US dollar eventually goes into hyperinflation and fails, because every fiat currency has had it happen in the history of the world.
Right.
But it's crazy. It seems pretty alarmist to say, yeah, this is definitely going to happen.
So if that happens, though, Ryan, why would you want to be holding the very asset that is depreciating so rapidly in value? You're not going to be able to buy hardly anything with the cash that you're sitting on.
I said liquid. Bitcoin's liquid. Stocks are liquid. I just want to be liquid in a place where I can cover my debts.
Oh, okay. So you're not talking about. I thought you were talking about holding like a lot of cash, enough cash to pay off your mortgage, but you're not. You're talking about
that. No, that's not what I mean.
I don't know if you guys thought that or not. That's sort of what I was thinking you were saying.
Well, when I said hard assets and commodities, you were just talking about liquid, and I was trying to hint at Bitcoin, because I see it as a commodity and a hard asset, also super liquid.
I thought I heard he needs like a suitcase full of money that he can just escape to the Caribbean.
Thanks for clarifying that. I obviously didn't. Yeah, that's a really, really good clarification, because the point that Nick and I were making about Dave Ramsey is, and just put this really, really simply, the people with the least amount of money are hit the worst by inflation, and the reason why is because let's talk about stimulus, right? The people that need the stimulus the most are hurt the most by the stimulus. That's crazy. Like that'll blow your mind if you really think about it. Because the people that actually need that $4,000 payment or whatever, what's happening to them is they're actually taking the $4,000, they're paying off credit card debt, they're paying
spending
their rent, they're actually using it. And what's happening to everybody else? They're taking that $4,000 and they're putting it to work in some type of investment. Well, because they received that $4,000 check and everyone else received that $4,000, I'm just using 4,000, but the $2 trillion or whatever, what's happening? Our supply is going up, inflation's happening, and that person that spent their money, they have no assets, and the stock market isn't helping them. Real estate,
and maybe the most important piece of this is their wages don't change. Their wages are the same. But meanwhile, their stimulus check is devaluing their wages. It's a really backwards. It's a really backwards, messed up thing that's happening.
And this is why the Dave Ramsey model, if you're like me and you grew up in the Midwest in a church, every church in the Midwest had the financial peace seminar, and it's great to get out of debt. If you can get out of debt, fine. But in order to get out of debt, you're probably taking your dollars that you could have been putting to work for you, and you're paying off lower interest debt. So pay off credit card debt, pay that kind of stuff. But we got to teach people how to put their money to work for them, which is the only way you're going to combat inflation.
And that's why I brought it up. It's just what you're saying. Like, there's, everybody knows Dave Ramsey. Everybody knows that model, but nobody wants to talk about how debt can be utilized as a good thing and put your money to work for you, so you can live, a little, a little more prosperous life by leveraging the banks.
Now, Josh, what happens when you're talking to somebody and they say, you know what, man, it's honestly, it's just a peace of mind thing. Like, I just want to, pay off my house. I know I've got the cash to pay off my house. I want to pay it off, even though I could get a 3% interest rate on my mortgage. It's just, for me, it's just a peace of mind thing. You got to say, it's a personal decision, right? Because it's their money. They can do whatever the hell they want with it. That's why we're in
100%
America, right?
I've actually been having this conversation.
But you almost want to grab them and just say, like, listen, you're not understanding. Like, you're not understanding. You're missing the thing, dude. Like, it's tough. I've had this conversation with people too, man. It's so tough.
And actually, it's been 50-50 for the past month. I've been talking. I've talked to 4 different families about this, and actually, what I'm not going to mention names on here, but only one of them admitted they were scared of debt. One of them actually admitted. The other one wouldn't admit, but it was actually more scared of the person who was admitting they were scared. And I'm like, you're scared.
You know what that stems from? That stems from a broken relationship with money.
Yes.
Like from childhood, from early childhood days, they were taught money is either the root of all evil, or only bad people like want more money. Like, don't think about that, right? And so and by the way, I'm speaking from firsthand experience of this, because that's my family. This is my parents I'm talking about. They programmed this into me. Like, they were big spenders. They really wanted to pay down their mortgage debt. There was never any talk about investing and how can they grow their and they're middle class. But to be honest, they could have had a much more affluent life, I guess. And money's not everything, but it affords flexibility. My mom's still working. Not to like totally go down a diatribe here, but my mom could choose to not be working right now, but she's working because she has to work, right? But if she would have understood some of these things, and those are real things here.
Yeah.
These are not things that you just brush off as money isn't everything. No, this is, at a certain point, this is very important, right? We're talking about like real life shit here. You shouldn't just brush it off. You should understand the gravity of all of it. And I think a lot of times people just don't understand. They're not thinking about these types of things. Sorry, Josh.
No, you're totally
fine. This gets me amped up.
Yeah,
but that's because,
I like this.
Well, that's because what finance isn't taught in schools, right? They're just starting to bring it into the curriculum. Like my little sister, actually, she's like 12, and she's actually just starting a finance class that is teaching her about stocks and trading stocks like virtually with virtual money, stuff like that.
Cool.
Wow, that's good stuff.
Never too young, I think. Never too early to start.
So Josh, can continue on this. So you've talked to these families, right? And so one of them couldn't admit because there's like this thing inside. What do you think that thing is? And like, how do you handle that conversation?
So I'm close. I'm close with them. They had just sold their house and they rushed it, and they actually sold it before they found another house, and they're hoping to move closer into town. And they actually had to move further away because they couldn't afford a house closer into town. And it only, when I say afford, I say they can afford, but they don't want to do a 20% down They want to put down. They're buying basically all the land cash. They're gonna build the home fresh, and they're gonna put down like 50% on the home. That's how much cash they have. They
Yep.
have this big chunk of cash, and I'm like, you guys are scared of a mortgage. She's like, well, no, we just want to own our stuff. You know, we're traditional. We don't want the bank to own it. We want to own it. And I'm putting myself in their mind, and I get it. It's like a more fruitful thing. It's, I guess, it really is theirs at that point, right? It's not the bank's. There's no like thing hanging over your head like, oh, I got these debt service payments. But isn't that fair though? And I know the people well. The husband's parents were horrible with money. They grew up poor. They didn't save. They didn't invest. And Dave Ramsey, of course, is on their curriculum for how they treat their finances. So, but they're not scared, right? They're not afraid of debt.
I think it's wrong. I think it's wrong to say that that's the wrong way of doing it. I don't think there's a wrong way of doing it. I think there's just a more probably optimized. And I think about a study that I saw a few months back. Somebody put all of their safety net. So part of the Dave Ramsey thing is you should have a 6-month safety net of cash. I think you should too. But somebody did a study of putting all of your safety net of cash starting in 2000 or something like that, all the way through this year, and seeing, okay, instead of having this safety net of cash sitting in cash, put it in the market, and then also take the the cash. And so what they did was they basically made it so that you had like an immediate crash in 2001, you had the crash in 2008, you had all these things happen, and what they proved was that having all of your cash, even your safety net in the market over the long term was far better as far as the return goes than leaving a portion of your cash out. And so like that's true. Like that's what data says over an extended period of time. But I also think there's something to like peace and feeling like control and like sovereign. This is my house. It's not owned by the bank. And so I agree. Obviously, I'm kind of playing devil's advocate right now. I agree with what you guys are saying, because put your cash to work. But I was talking to my dad about this just this last weekend, and he's like, if something really, really bad happens, you're, and it is fear, you're right. But if something really, really bad happens, a job is lost, or, something like this happens, you're in a good position. And of course, we could argue that all day. Okay, well, would you really been in a worse position? Well, maybe yes, maybe no. But I just think I think what I would personally advocate for isn't necessarily everyone doing the same thing. Like, everyone should always have their mortgage for 30 years or whatever. I think there has to be something in between, kind of a debt-rich society mentality and what's probably acceptable, which is, yeah, I didn't maximize return on every dollar I had over my life, but I did maximize like my freedom and my comfort and my peace. And on top of that, I still invested. What I struggle with more are the people that just aren't investing really at all. They got a 401k at work, and they're just not doing anything other than that. That's where I think there's more education that's needed with that. And like I said, the car loan, you got 2% interest. Do you really have to pay that off, way ahead of time, or could you use those dollars better? I guess what I'm saying is I think there's something in the middle between what we're saying is probably okay too, even though this isn't
Yeah,
financial.
I agree. I fully agree with that, Ryan. I just, we all have our own personality set. And so like my personality is, I watched my family, not have the right mentality around money and finances. And it's honestly the driving force that kicks my ass in the morning, and it makes me kind of think to myself, what am I doing? How can I kind of like optimize or maximize every day? Now you could look at that, depending on where you're from, you could say, oh, that's unhealthy. It's who I am, it's just my wiring. It's my chemical makeup. I can't change it. It's just who I am. Some people are different. Everybody's different, right? If you're okay with a more modest approach, and really what you care about is security and knowing what you have and things like that. I mean, I would still encourage you to think about things like Bitcoin, right? Because even if you're hoarding your dollars, that's not necessarily security, and that's just factual. If you look,
Right.
we've talked about this before, but that's not like up for debate. But yeah, I mean, I think it's all about, but I can't help it. I have to just speak from, again, my own personal lens.
Right.
I can't help but feel like others could think differently if they just understood. And that sometimes is very frustrating, because it's, you think, right? You have the thought that if they just knew what you knew, they would behave differently. If they just had the knowledge, they would behave differently. But that's not always the case. That's not necessarily the case with everybody. It's something that I struggle with, for sure, with my family, especially on my mom's side. Yeah, Josh, what do you got?
That's the question here, man. Is the education? If everybody had all this education and fully understood what this is,
then choose what you want to do. Yeah.
money work, would they still make the same decisions? I'm in the camp they wouldn't.
Yeah, that's a good.
If
No.
they could fully
No way.
see what's
No
going on
way.
with wealth and freedom, like,
Yep.
okay, so I 9 to 5, at some job, the same place until you retire, 401k. Yeah, you own your house, but you're maybe you're in your 60s and your health isn't like perfect, but you can't do some things that you could have done, if you had built up some wealth and maybe leveraged a little bit and created some freedoms.
Totally.
Growing, and you could have done these things. And like, my parents
But,
have been doing that for a long time. They just they didn't do the best job of sharing it. I just thought they were rich, but they were leveraging, and they weren't afraid of debt. They use HELOCs. They leverage with LLCs. They leverage the real estate, and like it always seems like they're on vacation. It seems like they've been retired for 2 decades. Dad has, and mom's like almost never worked. She took care of us as kids. She did a wonderful job doing that. But they are like party animals, dude, and they're just enjoying life. And to me it's really inspiring, and it's just fun. Like it's something to look up to. Like whatever you do, at that age, is have energy and the freedoms to do what you want. If you want to go to France, go to France. Like, but money's just not an issue or whatever. If you want to go to Hawaii, or if you want to stay home and just cook out with your family,
And
you can
it's
do that
not
too. It's a choice what you
exactly.
want to
It
do.
might not be lavish vacations. Yeah. Am I breaking up, guys? Sorry, I'm
No, you're
a little
good.
choppy on
No,
my
you're
side. I might have to go
good.
inside here. Okay. Dude, it's not even that it's about the lavish vacations.
Not at all.
It's about, hey, you wanna play the new video game? You do whatever you want. Do whatever the hell you want, because you actually have the means, whether that's passive income through cash flow. Like your family, Josh, big real estate family, right? So passive income is a big deal. And eventually I'm going to convert my wealth into passive income through real estate as well. I'll be buying rental properties and things like that. Sorry, I'm losing you guys a little bit. But I agree. But, sometimes when you're talking to people about this type of thing, they don't want to hear it. It's just in one ear, out the other, because it's just, there's too much, man. There's too much ingrained systemic it's almost like anti-education. Like it's
Yeah.
It's the opposite of what they needed to be hearing and needed to learn about. But they bought it, man. They shoveled it in, and they absorbed it all, and it's so hard to kind of claw. You know what it is? I've heard somebody describe this really well once. It's a mindset of scarcity or abundance. You either have a mindset of abundance or a mindset of scarcity. And a mindset of scarcity, you think, when you think about a marketplace, like let's think about the stock market, you think, how I could lose my money in the stock market. Like all of us, we can't even relate to that. Like Ryan, you, Josh, Eric, we can't even relate to that, because when we enter into something, we're entering in with a mindset of abundance. Like, no, I believe in this thing. It can grow, it can prosper, because there's so much money in the world. There's all this print, like there's just, because we understand the bigger picture. But people have this mindset of scarcity where it's every dollar is, precious, and everything, I could lose money here. But that's the thing, man, is it's not like that. Like, again, the dollar depreciates and the stock market appreciates when you look at a long-term basis. And I haven't been the biggest advocate of like investing in the index funds and things like that, but look at it. Go look at it. Pull up a chart. Pull up a 50-year chart, a 100-year chart. Yeah, it's up and to the right.
Up and to the right.
It's not up and to the left.
You're looking at
up
a mirror.
and to the left would be. Yeah.
You're looking at a mirror. Yeah, you guys are actually bringing back a memory, personal memory for me. Now that I think about it, I was actually I had a little bit of money that was from an inheritance. My uncle was what do you call it? The executor or whatever. I'm not sure what you call it, but my parents, my parents were pay off your debt, people, like we talked about, which I don't think there's anything wrong with that. I think we covered that, but and so I had this little bit of money, and the money that I had in this account, it was in a Vanguard account. When I finished school, when I think I was 21 or 22, somewhere in that 22, actually maybe a little bit older than that, but I called him and I said, hey, I got this little bit of college debt. I paid for most of my college, through school, but I had a little bit of debt. And so I called him and I said, hey, could I take some of this money and pay off my college debt? Then I'll be able to kind of go into my life without any college debt. And he goes, you need to read the book, Rich Dad, Poor Dad. And you need to learn about putting your money to work for you and managing debt. And I remember I went from there and I talked to my parents about it, and I was like, this is the feedback he gave me. And it was different for them, kind of like what you're saying, Josh. It's, it's just a different way of thinking. And it was different for me. I argued with them right away. I'm like, what are you talking about? Like, why wouldn't I want to pay off my debt if I didn't have the cash? So you're right. It's just, how do you get the education? Because the education's, it's a little bit funky. It feels really, really good to tell people, oh yeah, it's good to pay off your debt. Because that's like, it's counterintuitive to preach the opposite of that, right? That paying off your debt isn't always the best move. So it's an interesting topic, and I don't know, maybe there's somebody listening that's helped.
When they first hear it, like, oh, you shouldn't do that, you shouldn't pay off your debt right away, they get scared. And I'm down in the Gulf Shores right now with some hockey buddies, and I've been talking to them about Bitcoin, of course, and we were talking about Rich Dad, Poor Dad. And one of the guys, he subscribes to Dave Ramsey and pay off all your debt and stuff and this and that, and he doesn't do any investing. And by the end of the conversation, he's opening up a Bitcoin account and he's buying Bitcoin, which is awesome. But he's starting to look at debt differently. So like he was actually open. He was very open to new, I guess, ideas. But which is cool.
And every time you have a conversation like that, you want to have that conversation with everybody, because it sounds like this guy's receptive. Maybe you're helping him. Maybe you're improving his quality of life for the rest of his life, maybe, right? By changing his mindset around this.
I think so, man. I think just a little education tweak is he had never. I could tell he had never heard it before. Like, don't. I was just like, don't subscribe to Dave Ramsey. I mean, and of course, I'm not like, hey, leverage up, like 10 times leverage. No, it's like I was being reasonable. I mean, if you saw my portfolio, I'm not leveraged to the gills. Like I can handle a crash. You know, I'm not gonna preach something that I would never do myself, but the education part is all we can do. You don't want to force it on people or especially make them feel bad about what they're doing, like and tell them it's wrong. Um, you just kind of explain like, hey, like, have you heard of this? You've heard of using cash, make it work for you instead of hoarding it, paying off your debts, blah blah blah. Use the debt instead of. Oh, there's one thing I wanted to say about credit cards is I use them because I can, not because I have to. I've opened up about 35 credit cards over the past 5 years.
Dude,
And
that's crazy.
I'm not a big spender. I'm not a big baller, but I would use them for it. I would get the welcome bonuses, right? You- They flagged me for, someone who's mistreating the system. So I've actually been cut off on the welcome bonuses, but got a big expenditure and my credit card debt's almost zero, by the way. I have about 100 grand of available and I'm only using about 3,000. So like, well, my score is fine, but when I first tell that to people about the credit cards, that gives them anxiety. Like, you have 35 credit cards? What are you doing? Like, are you insane? And I'm just like, no, man, I'm
Well,
using it to my advantage.
to be fair, I mean, everybody has a limit to you're probably doing the optimal, like we said the word optimized. I think that's probably the operative word. You might be actually optimizing your money situation there, but there's a optimization versus hassle curve,
Yeah, there
right?
is. Yeah,
And
right.
you're way on the hassle curve
It'd be hard to
and
manage.
also on the optimized curve. But I would prefer to be on the credit card thing. I'd prefer to be lower on that curve
When you get
personally.
when it's become a habit. Like, I'm always being sent credit cards and stuff in the mail. I'm always checking the terms. Like, what are my expenditures going to be up this month? So
Dude.
it's second nature. And like, once you start doing it, like, it is no hassle at all to me, because you spend it to the point where you need to, and you basically spread it out. So if you have like a big expenditure today or over the next few months, like, I'm on vacation, so I'd open up a new credit card naturally, and I'm using that because I'm spending more this week than I normally would in my day-to-day periods. So I'm gonna spread that out over the next 14 months. You know what I mean? And so I'm not gonna use that credit card much once I go back home. But automatic payments set up to my home base checking account. Like, with all the automation today, it's really not much of a hassle. But
Mhm.
to me, I can say that. But to someone who's just starting to do it, yes, it will be a hassle if you're new to it.
Let's give another
Dude, I
example.
get 100 emails a day I got to read through, man. I can't be fucking around with credit cards, reading the terms and conditions.
But but this is a really good point, because like, that's, for whatever reason, that's what works for Josh. For me, I've used the same credit card for 3 or 4 years. I get 2% cash back every month. I take, the cash back, I plug it in to buy more Bitcoin, or whatever. And so I have one credit card. So, but the point is like, but Josh and I are doing the same thing. I have one credit card and I have it automatically paying off, so I'm not paying any credit card fees. You have a bunch, so you can take advantage of the benefits. I think the important thing is like, do what's right for you. The only thing I think we're all agreeing on is like, how can you get in some assets that are going to go up over, like what Nick said, they're going to go up, have historically went up and to the right over 2, 3, 4, 5 year time horizon.
Real estate, by the way, does the same thing. I mentioned the stock market, the S&P 500, and things like that. We're obviously more risk on than those things, but real estate also, if you look at it, real estate is up and to the right as well. So
I wanted to show one more. Go
Not
ahead.
in Bitcoin terms. We
Yeah.
should throw that out there. Everything's down and to the right in Bitcoin terms.
Yep. I couldn't find the non-video one. You guys can see this here?
yeah.
I
Who's this
couldn't.
guy, dude? Who the
Have you
hell
seen
is
this
this
guy?
fucking dude? How many Chick-fil-A is this guy eating?
This guy, he's some type of general
Oh my
manager of the
God.
Bank of International Settlements.
Holy
And
shit.
He's been
Okay.
like one of like the top guys that's always talking about digital currencies. And I couldn't see the link. I couldn't find the link from today, but here's what he said: with cash, we don't know who is using a $100 bill, but with CBDCs, which are centrally controlled digital currencies, we could have absolute control. Now, this is what this guy is like, how he's communicating in his press release. You're like, what he wants everyone to see is this absolute control.
Oh
So
my God, dude.
But here's the cool thing, in my opinion. What's going to happen is central governments are going to start implementing digital currencies. You have to have a wallet to have a digital currency. There's going to be a point in time where people are going to realize they don't want to be monitored by the state, and they're going to be looking for an alternative. And so I just think that's pretty darn exciting for cryptocurrencies, specifically Bitcoin. It's just the future is going there regardless, and governments are already telling people we're going to have absolute control over monitoring all of your spending. And that also
Dude,
goes
Ryan, you posted another tweet
yeah.
that I thought was even scarier than that, and that's pretty damn scary. From I don't know who it was from, but it was about China is experimenting with expiration dates on their digital currencies. Yeah, okay, you're pulling it up.
That's right. Yeah. And there was some pretty interesting things on Twitter today, and I just didn't pull all of them up for this. But the point is, there's a lot of crazy stuff. Actually, there's this guy.
But wait! I want to finish the thought on this though, because I think it's just it's so mind blowing. Beijing has tested expiration dates to encourage users to spend it quickly for times when the economy needs a jumpstart. Ryan, can you click on that tweet for a second? Not the link, but the actual tweet itself. Not the link, just to see the replies. And then can you scroll down? Shoot, this guy had a few different comments.
Yeah, that's what
it's fine. It's fine. It's fine. What the guy said was like, just wait until they say you can't spend it on liquor. You can only spend it. You can only spend it in these certain ways, right?
Yeah, I saw the same thing.
That's crazy.
Yeah,
that's crazy.
If you don't meet a certain requirement, but let's just think about this for a second. Why would you want to have an expiration? You would want to have an expiration because you want people to spend, of course. Why do you want people to spend? Well, because you're trying to stimulate the economy. But let's think about this. What does that mean for how the governments are prompting us today? Do you think the governments are prompting us to save, or are the governments prompting us to spend? I think the government sees us as these little pigs that are eating up, gross GDP or whatever, producing and
totally
GDP. And
yes.
This is Josh and Nick. You're probably in the same boat, but when you get into Bitcoin, at least for me, something happened where like I just don't like to spend that much anymore. I want more Bitcoin. My little six-year-old daughter is always telling me, Daddy, you just want more Bitcoin. I'm like, yeah, that's true. I do want more Bitcoin.
You're a greedy guy over there, man.
Yeah, I know. But I feel like it's the difference between cash. Like cash, people used to say like cash will burn a hole in your pocket. Like, you got like, money for your birthday, or is that cash burning a hole in your pocket? Bitcoin for me, I don't want to spend it. And it's kind of a different, it's a switch in thinking. Josh, have you?
I do. Cash does burn a hole in my pocket. It just gets burnt into my investments immediately.
Yeah.
I don't keep very much cash, and I really don't spend any money except for on rent. We've got a nice place here because we want to enjoy San Francisco, but aside from rent, like we had DoorDash last night. It was $40. That was that was up there for us.
Isn't that funny though? Like people that are investors probably, in my experience, spend less. Oftentimes, at least young people like us that are investors spend less than people that are into more debt.
100%.
Yeah,
100%.
holding cash.
But dude, my grandpa, he did pretty well, and he would save his plastic silverware. He wouldn't throw it away. I had this lunchbox one time, and it had mold in it, and I was gonna throw it away. He wouldn't let me. He took it. He was like 90 at this point. Like he was, he did all right. And I'm just like, Grandpa, you can buy a new one. Like you can get all this new stuff. You can have gold silverware. Like, why are you using plastic spoons and forks and reusing them? I'm just like, man.
Guys,
dude, he knows what's up.
We only have a couple minutes left. I have a Bitcoin bull run 2-minute thing if you guys want to see it.
Yeah, hit us with it.
100%.
Eric, we need because I feel like I'm doing this like every podcast. We need like some imaging
Like
for Ryan
Bitcoin
bull.
Yeah, like a flashing strobe light
exactly.
or something to let people know.
I'll try to hook it up with some
I like
animations.
on my head or something.
True, I'll get some animations going. Some sound effects.
Let's get on that for next time.
For
Ryan.
Some sound effects.
First, Josh, were you saying something?
Eric had a great idea for your like image. You within like a GIF, like smiling about a Bitcoin or something.
Okay.
Yes, dude. Yes, give it a kiss. You gotta like smooch it right on the side.
Thank you, Bitcoin. Yeah.
Yeah, exactly.
All right, so this is gonna be the rapid Bitcoin bull breakdown here. We'll try to come up with a better name. So first of all, we didn't get to talk about it at all, but Coinbase better than expected. People are absolutely going crazy. I heard somebody say today that that Coinbase's first financial numbers were better than any small financial or growth financial organization in recent memory. Significantly better than Robinhood. 4 times the number of users than Robinhood. More revenue, more profit. So we're talking about a pretty big deal here. We didn't get to go through it, but net income of right around $800 million in the first quarter, and adjusted EBITDA 1.1 billion.
It's probably gonna push Bitcoin to like 70K next week.
I wouldn't be surprised if people would get pretty excited about. Remember how we were talking about in the gold rush, the companies that were making all the money were the shovel manufacturers. Coinbase is a really good shovel manufacturer.
Yeah.
All right, next up here.
But I think the point there, Ryan, is eventually shovels just a commodity.
They're commodity. Yeah, exactly. That's what we talked about last time. Is Binance really has their number, so can they figure it out in the U.S. Next chart here. I'll try to zoom in here. Market cap to thermal cap ratio. So market cap, thermal cap is you can see what happened in the first bull cycle here, 2014 here, 2017, and a little bit into 2018 here. You can see a similar, I guess, height. You can see where we're at here. We should end up in this range.
Oh, so
I
that's
think it's
that up there.
I think it's off a little bit.
Eric, you start yawning over there,
I
I'm gonna
know,
come slap you, dude.
This is getting sleepy right here. Yeah.
Well, think about it. So, like, it would be
What's
like if
getting
we're-
sleepy? What the
This
hell?
chart right here.
What
This
the
is
hell are you
Bitcoin
talking
bull-
about?
bull-
What is sleepy about
whatever.
this chart? You better
All right,
wake
well,
up, man.
This graphic was a flop. All right, this is the one we.
It wasn't. It wasn't. I
All
was
right.
locked in.
All right.
Okay.
This is my favorite one.
This
This is a banger.
It keeps doing what we keep talking about. In the last 24 hours, 15,680 Bitcoin left exchanges. 23,000 the last week, 61,000 the last month, 568,000 in the last year. That's insane.
Take as
And
much
this-
Bitcoin off the exchange as you can, guys, to help us pump.
I mean, this has to be a potential short squeeze or just a supply shock in the making. And then finally, this is one that we've been looking at. In my opinion, the Bitcoin dominance chart is the most important thing you can look at right now.
It's coming down.
Well, the reason why, do you guys remember the last time we talked, we were right here. I don't know if you can see my mouse. Do you guys remember what I said? I said, keep an eye on this because we were at 58, 59. I said, if we go below 58 into the 57 range, we're at a 6-month low. We're actually right now at a year low on the Bitcoin dominance. And what that means is you take the entire cryptocurrency market cap and you take Bitcoin and then you take all of the other cryptocurrencies. The amount of the market cap that is Bitcoin continues to drop. What does that mean? It means that we're either entering an alt season. So if we zoom out here, see what happened in 2017, 2018. We saw continued drop, continued drop, continued drop. And then this was just when we talk about alts going 10 times, this is when it happens, is right in this range right here.
Ooh. So own a couple alts.
Exactly. So what we're seeing right now is something that we haven't seen in a year. My feeling is that we're going to see a jump, kind of like see what you're seeing here, where you saw these jumps. We're going to see a Bitcoin run in April or May, I still believe. If we don't, your alts are going to be feeling really, really good. So
I honestly, I know, Ryan, you said this is the most important chart, but I honestly, I mean, it matters. It matters for the short term. But what I really want to see is the total market cap for crypto. I want to see that grow. So maybe at some point we can see it.
trillion.
no, it has been growing.
It just
$2
hit
trillion.
2 trillion.
Okay. I think that should be 10, 15, 20 trillion in total, right? In terms of maybe more than, well, somewhere around there in terms of total
It
market
didn't
cap.
take that long. It hit 1 trillion and then it hit 2 trillion and it went really fast.
Yeah, I mean, I think the Bitcoin dominance is relevant for what are we
That was
pulling
like
up
a
here?
month or two ago, wasn't it? When they hit
Total
1 trillion.
market cap.
Yeah, man, dude, we are. I can't help but feel like we're in on something special here, and
Yeah.
I don't know. I think this shit
that's-
is gonna blow up.
So that's the bull market rundown. I think I used like different names. Yeah. I'm gonna be keeping an eye on that, guys. I really find it hard to believe that Bitcoin is just going to sit on the sidelines while alts are picking up steam and stealing,
Dominance.
share. Yeah, it's really dominance, not really share, but we'll see. Just keep an eye on it. The point is, anytime you get to a 1-year low in something like that, you got to keep an eye on it because it's in a
Yeah.
position for a potential reversal.
Yeah.
Totally. I'll just share right now. I actually sold all of my Bitcoin.
Did you know this, Ryan?
Dude, that's a thumbnail
Ryan,
right there.
Get that screen.
Get Ryan doing that.
Did you know this, Ryan? Eric,
I
did you-
didn't know this, but
Yeah,
I
he told me before stream, and I was just like, dude, you're crazy, man.
yeah.
So here's
How
the thing.
could
I'll
you?
preface with this. All right. I'll preface with this. I own a significant stake in a Bitcoin mining company called Hut 8 out of Alberta, Canada. We've talked about them on the pod before. They hodl every single Bitcoin they mine. Their quarter over quarter Bitcoin balance sheet grew by 17%. I expect that to continue. They just bought $30 million worth of brand new NVIDIA ASIC miners. And so I'm very exposed to Bitcoin still through that. I think it's severely undervalued. And if Bitcoin explodes, trust me, that miner will explode. I think eventually it could kind of morph into more of like a bank type of thing. Like I think the big miners, if they hodl their coins, we could see some interesting things happen long term with how they're able to sort of control that asset and leverage it and do different things with it. And then I also own a substantial amount of Tesla, which I know we've talked about this too, where, Tesla, is it a pseudo play on Bitcoin? Like, does Tesla even benefit from like a big run in Bitcoin? Maybe. I honestly don't know. Like, it's a small percentage of their balance sheet. Maybe they add to it. If they continue to add to it, then I could see over time, then, there might be some correlation there. But my point is that I'm still very much I am invested in Bitcoin. I just don't own the raw corn. And I bought Luna. So Luna is we talked about it all this past podcast, but it's the governance. It's the main coin for the Terra ecosystem. And so now I have about $150,000 in between Luna and Mir. And I'm kind of I honestly
Yes,
I've done a lot of
Whoa!
I've done a
Did you guys see this news article? It says Mir just got hacked.
Hey, look
yeah
at this
right
smirk.
dude.
Look at this smirk.
Yeah right dude.
Oh,
Look at
Eric-
this.
late
Eric,
April
you're
Fool's
live.
joke for you guys.
Oh,
dare you?
Yeah.
No, you can't even scare me, dude. I got thick skin, babe. I don't make a move like this without being.
I think your heart rate went up just a little bit for a
Nah,
second.
dude, it was level, dude. Fucking level. I put about 50K into Hut 8 Waisu. But yeah, I
But
appreciate
it's
the
like
question.
75
And that was,
now or what?
huh?
It's like 75 now or what?
75 what?
You put in 50, but now it's like 75 because like it's gone up a lot since you told us about that.
I put in probably 120 or 130, maybe something like that. And
Into Hut?
no, sorry,
This
into Luna
Okay.
and Mirror, into the Terra
Wei
ecosystem.
Sue is asking how much did you put into Hut?
Yeah, about 50K.
Okay.
About
But then it
50K,
went up like
yeah.
$2, didn't it? It went up. It's
No,
like-
I'm
it's
actually
like-
down.
Oh,
I'm actually
really?
down on it right now. Yeah, for my entry.
Damn.
I didn't do that today. It's not like I did that today. I've been in Hut 8 for
Oh
months.
well, this morning it
so.
was 850. So okay.
That's
It closed the day It
750.
shit out at the end of the day.
Yeah.
Yeah.
Damn.
That's a strong.
So
investment
anyway,
for
this
it all.
is my big thing. It's because you know what it is. I love Bitcoin. I love how it introduced me to crypto and it introduced me to these markets and what's happening. I think the innovation here just blows my mind. But honestly, I never felt the desire to own gold. I've never really wanted to own something that's purely a store of value, because it's just a store of value. And I still want to own Bitcoin because I think it has huge growth potential, but like eventually, like far out in time, right? Let's say Bitcoin is $500,000 per Bitcoin. I won't keep it. Like I won't continue to hold it because I don't want to hold gold. I don't want to hold something that approximates gold or is a store of value, a pure store of value like that. But with Luna, I see so much growth potential. And if you haven't watched our last video on this, I would recommend going and watching the video that we posted on Sunday. I think that does seem to be a pretty good overview. But we'll see, man. I mean, I'm fully expecting, just I'll share right now, I'm fully expecting a 50% market correction for both Mirror and Luna. Because that's just the mindset that I have to get into in order to understand, in order to be comfortable with the volatility. Because this is much more volatile than Bitcoin, right? For example, or let alone like stocks. Forget about that. But I'm super bullish longer term on the ecosystem, and I think honestly, I think it can kind of change a lot of the ways that we do things. And if it plays out, it could pay out big. But really, I'm not even thinking about that either. I'm just kind of thinking this is something that I really believe in. I've done a ton of research. I would very much recommend you all to do your own research. This is not financial advice by any means, but yeah, this is my move, and we'll see how it plays out. But I have very high conviction.
I want to say one thing. I don't condone this. I do own Luna and Mirror. I've been buying it. I've been buying Luna for probably about 3 weeks now. But we've been talking about it for like 10 weeks and wishing we would have bought it, so we finally got in. So I do love the sorry if I lost you there. I just got a phone call. I do love the ecosystem, but I couldn't sell my Bitcoin. You're cray for doing that.
Yeah,
I probably am.
If we really go into an alt season, Luna is positioned as well as any alt to see explosive growth. There's just absolutely no question.
And do you say that from a technical standpoint, Ryan, or where are you coming from with that, I guess?
Yeah, from a technical analysis perspective, I mean, I could show you all the data. Luna is as strong as any alt that I have tracked, and I track all of them.
Wow. And this is by the way, this is just live. We haven't talked about this. You haven't even said that aloud to me. I haven't.
Yeah, no, let me look right now. It's
yeah, I don't know where it's at. I'm not sure where it's at right now. I'm trying to like limit the amount of times that I like look at this stuff because
just
it's
having
a lot.
all your eggs in one basket though, that's just, I don't know, man. It's too risky. You gotta diversify.
It's not though. I don't have all my eggs in one basket. I own.
Yeah, but
if like the inventor of Mir all of a sudden is like, I want to, sell all my Mir or something like that, and then like it dumps.
Yeah, I'm not even thinking about it, Eric, from like a pump it, dump it. I'm so not a trader, and you got to understand, like, if you are a trader, if you are somebody who's looking at the interwebs and trying to gauge all the micro frequency wavelengths and, oh, he's going to dump it or whatever, like, that's not me. I'm looking at the fundamentals of the project. I'm looking at how it's currently being used in the real world today. And that's what I'm basing my investment decisions off of. It's very much removed from like any technical analysis or really anything aside from just the fundamentals, the founding team, how it's being used, that type of thing is what I'm interested in. And that's why I'm invested. Yeah. But everybody has their own strategy.
Yeah.
I'm a believer that you should invest. Well, for me personally, and again, this is not financial advice, but I like to build up lots of conviction. I like to find things that I build up tons of conviction around. And then I make sizable bets on those things that I have high conviction around. And I've done pretty well. This past year, I had like over 200% return on investment. And I was heavily invested all throughout March of last year. And I was putting in all sorts of things, but that's just me. And, everybody has their own strategy.
Yeah. Yep, you are a ride or die kind of guy. That's what I've learned about you, which is
I could die. I could die. I could die. It's just,
that's not what I
you
mean.
know.
You know what I mean. Like you're
No,
just
I know what you mean.
you're all in. You're an all in type of personality. And
Yeah.
I mean, on my list right now, not that it really means anything, but I track right now it's like 205 altcoins every day for the last year or so. And Luna is 13th out of 205 coins that I track.
Could you show us, Ryan? Could you show us maybe just really actually more education for me? How do you look at? Is it just the data, or are you also looking at the chart to kind of determine? Because I know a lot of people that use the lines and stuff like that. Are you doing any of that, or?
So yeah, I'm more than happy to share. It's just a lot of numbers though, so it's not going to mean much. But Josh has to get going, and I have to go on. And I apologize. I didn't. I should have left more room for this, Nick. So maybe we can jump into this
It's
more.
like an Aztec freaking calendar over here.
Oh my
No,
god, dude. Oh,
well,
shit.
if complexity means anything, yeah, I mean it's up 625% in the last 3 months. I started tracking Luna August 28th, against all my other coins, and basically I just compare Luna to everything else. Now right now is a really, really good time to buy Luna from my data's perspective, because today it was ranked 176th out of 205, which means that it's extremely low right now compared to how it typically performs. So I know it's not what you're looking for, Nick, but I
That's all right,
track
man.
over
I was
time.
just curious.
Yeah.
Yeah, we got another question. We got a comment in here. It's nice that you can use a TFSA for HUT. I don't know. I think you're talking about a Canadian. That's like the Canadian equivalent of a Roth, a Roth account or something like that. I'm not sure what a TFSA is. Yeah. But anyway, are we trying to close out here?
Yeah, we're
Yeah,
probably gonna close it up for tonight.
Josh has to run, and I have to run as well. But
You can tell when Eric's room starts to get to a certain level of darkness.
Huh?
That's when everything starts to kind of shut down.
Dude,
Yes,
you're as all in as anybody in an alt that I've ever heard, ever, which is really cool, because that's just your style. Like there's nobody that has researched more than you have, and it's just good for you. And if it works out well, it's going to work out really, really, really well for you. And if it doesn't work out, it sounds like you're comfortable with that.
Yeah.
So it's exciting.
Yeah, that's exactly right. And I'm just I'll be honest and open about how it all goes, and we'll keep a tab on this. And I like I said, I'm anticipating 50% decline. I'm 25 years old, and thankfully we are in a position where it wouldn't like be devastating or anything like that. But I'm just a subscriber to, like, once you've built up at a certain amount of conviction, you go for it. And I have done more research than anybody. I don't know. I've done as much research as I can do, honestly. So and I feel good. So
Cool. Well, let's take this in, and maybe we can dig into it a little bit more next time. Some of the good conversation that can come out of this. So, all right. Well, everyone, thank you for joining us. We appreciate you. We're going to be back Thursday, 9 p.m. Eastern, 6 p.m. Pacific. And feel free to hit us up on Twitter. Leave some comments for us if you have topics you want us to make sure that we cover.
Yeah, join the Discord. The Discord link is down there.
Yep,
yeah, we're trying to get that popping in there. So come throw something in Discord, and we'll hop in there immediately and start talking to you.
Absolutely. All right. Thanks, everyone.
All right. Good night, guys. Good night.
We'll see you.
Night, guys. Take care.
Yeah.
Bye.